Now, I'm pretty sure, not just me, and I was reading some things too, but I did issue the old red alert. JSNIP4 released the financial red alert last week. We have the Chinese stock market halted yesterday, and we have the world's biggest, United States, New York Stock Exchange, halted from around 11:30 to like 3 something p.m. Technical glitch. Due to a technical glitch. So here's an interesting article about that, courtesy of Silver Doctors. The shutdown of the New York Stock Exchange today took a should be a huge wake-up call for all of us. And he's posting some stuff from the Economic Collapse blog. Do you believe that the New York Stock Exchange shut down because of a technical glitch on Wednesday? At 11:32 a.m. on Wednesday morning, trading on the New York Stock Exchange was halted due to internal technical issues, and it did not resume until 3:10 p.m. Officials insist there is no evidence that a cyber attack caused the technical problems, even though hacktivists had hinted that something may happen the night before. Adding to the suspicion is the fact that United Airlines and the Wall Street Journal also experienced very serious technical glitches on Wednesday. Now, do you really think hacktivists are going to bring down Wall Street? It would have already happened. When you were being told an $800 billion bailout's coming called the TARP Fund, the hacktivists would have done something then to make their point. No, we do not accept that, even though you Congress bastards voted for it, so here's what we're going to do. During that time, shortly after, Federal Reserve giving trillions to the banks, big banks. No vote of Congress or anything else, just we're going to do it. Would have been a perfect opportunity for a hacktivist group to do something similar. Where were they then? So on some random Wednesday morning, nothing in particular, we're going to nail the stock market. Again, assuming, because the New York Stock Exchange, people are saying no. You know, the CEO, I think, was on saying, no, there's absolutely no hacking. No, just a technical glitch. So if it really was a hacking, they're not going to admit it and just pretend it didn't happen, right? They don't want to spook anybody. However, if such a hack occurred, I got news for you. It was supposed to happen. The club made it happen. Others found it very curious that trading on the New York Stock Exchange was halted just after Chinese stocks had absolutely plummeted the night before. In fact, Hong Kong's Hang Seng Index experienced the largest one-day decline that we have witnessed since November 2008. So, is there more? So is there more going on here than meets the eye? Overall, the Dow was down 261 points on Wednesday. And the Dow and the S&P 500 both closed below their 200-day moving averages. Iron ore had its biggest daily price drop ever. That's a commodity, by the way. And the price of oil continued to decline. Another commodity. But it was the stunning shutdown of the New York Stock Exchange that made headlines all over the world. Such as the New York Stock Exchange, United Airlines, and the Wall Street Journal have all fallen victim to a series of massive technical glitches within hours of each other. In response to the shutdown, the following photo began circulating on Twitter. And I don't see it. It's actually not posted. It's weird. But was it really just a technical glitch? Of course, they probably would never admit it publicly if it was a cyber attack. We live at a time when the authorities are much more concerned with keeping everyone calm than they are about telling us the truth. So in the end, all we can really do is speculate about what really happened. And let me tell you, ain't no hacktivist group bringing that down. The club brought it down. Because ultimately what will happen when it really starts to have problems is they're going to publicly state the reason it's your 401k is being wiped away right now is because these hackers are getting in our system and wreaking havoc. Oh, next question, CNN spokesperson. Where are the hacks coming from? Oh, Syria and China, Russia, Iran. Syria, huh? Yeah, and to focus on Syria for a minute, these hacktivists, we've determined they're in a specific region of Syria where this is coming from, and that's where ISIS and ISIL, pick your poison, is located. We really got to go in there and stop them now. Let's just see how that plays out as this goes on. You know, not this reading, but this little series of events that's probably going to be coming to a world near you soon. So they probably would never admit it, right? We can only speculate about what happened. But what we do know is that the stock market crash in China got even worse the night before this shutdown. The Shanghai Composite Index and the Hang Seng Index both declined by almost 6% overnight. Overall, the Shanghai Composite Index is now down by more than 30% in less than a month. And the Chinese version of the NASDAQ, basically, is down by more than 40%. In just 3 weeks, stocks listed on mainland China's most prominent stock exchange have fallen by more than 30% from their 7-year highs. The even more speculative Chi-Nex index has lost 42% of its value over the last 21 days. 21 days. Government regulators have now banned for 6 months Chinese executives from selling the stock in their own companies. This is only one of a number of moves made by panicked officials. Well, it'll never happen here. Oh, really? Imagine being told you have this investment, and damn it, times are tough all of a sudden. I need out of this investment now. Sir, if you even think about selling your investment, you'll be thrown in prison. Hold on. I know I'm in China, but hold on. It's my company, correct? I'm an executive here. I have massive shares in this company. I'm a part owner, actually. Right? Yes. Okay. I have a bunch of shares here, right? Yes. So it's partially my company, my shares, and I can't sell them for 6 months, or basically until you say it's okay to sell them, or I go to prison. You'll be in big trouble if you sell them. But I really need to sell them now, as you all have witnessed. 30% decline in the stock market. Okay, this our main stock market. This other one's down 42%. The Hong Kong exchange is down similar numbers. I need to sell now. I don't want you to tell me in 6 months when everything's gone down 90%. Okay, you can sell now. Like, I have a company, I've got a family, I got to make decisions based on what's happening in the market, and you're telling me it's illegal to sell. Well, I got news for China. And it would be unbelievable to me if they really didn't know this. China, the massive sell-off in your stock market isn't by people in your country, executives or businesses. It's by the club who own everything. The club are the massive shareholders, stock shareholders, of your companies in China. just like the banks, or should I say the bank, such as like JP Morgan, again, Citigroup, the club banks, have the entire commodities market under their belt. So when we see a mass sell-off of commodities, we're not seeing a mass sell-off of people all over the world selling commodities contracts that they had, futures contracts. We're seeing the club selling massive contracts. They're the ones that are holding all of them. So the club, who has trillions of dollars to play with, trust me, China, your stock market increasing just like ours did over the same 7-year period. Oh, there's that 7 number again. 7-year period? Why do you think it did? Just because people in China did the same thing people in America did, and in Europe? Or is it the club that was buying into all of those markets to have a huge lion's share of all of those markets and the stocks that go with them, of course, and are now selling? That's where the selling's coming from. So when China tells some executive of some company, which is all of the executives of all of the companies in China apparently, you can't sell your shares for the next 6 months, I hope that also includes the club. And that the club can't go to the exchanges online and sell because China is not accepting any sell orders. Which means their market should stabilize somewhat. However, the article talks about only executives not being able to sell. Well, keep in mind, the club are not executives of any of the stocks that they own in China. They are, quote unquote, the guy on the street, so to speak, with a whole crap load of money to buy those shares. And believe me, they bought a ton. They wanted that market to rise just like ours did. Just like Lindsey Williams said it would. The markets would rise. After 2008, everyone's thinking, oh, it'll be a couple, 2-3 more years, 2012. He kept saying, it is not time. You bought yourself another couple years with these bailouts. It is not time. It's still not time. They've told me again, it is not time. Don't worry about it. It's going to keep going up. And by God, under the most ridiculous circumstances known to mankind, the market rose and rose and rose across the world. So if that's what Lindsey Williams said the elite's plan was to let all the markets rise, to pull every last sucker they can back in, and then when they're ready to pull the rug out from underneath them, that means that they are the ones who are going to be doing it. Which also means they're going to sell their lion's share of stock shares to cause the markets to crash. The average person is going to say, well, they're going to lose a ton of money possibly in the process, aren't they? Yeah, but it was free money to begin with. Did you hear the part where I said the Federal Reserve gave these banks trillions of dollars? On top of the $800-900 billion that our country gave them? And not only that, the Federal Reserve gave other foreign banks trillions of dollars too? Those same foreign banks were the too big to fail banks of the club. Just not American ones like that you recognize. Oh, JP Morgan Chase, Citigroup. No. It's the Deutsche Banks out there and those guys. Ambro. So they stocked the banks worldwide that they own, their club member banks, if you will, full of cash all these years, last seven years. Free taxpayer, on the taxpayer dime, basically, literally. Federal Reserve had to print it, so it's on the taxpayer dime. And that's who's been buying up all these shares. That's why the stock markets have risen way higher than they should have, are way overpriced than they should have ever been, and are going to precisely fail. So yes, the banks will lose some money when they sell. However, while their banks were using the free money that we all gave them, the CEOs of those banks and high-level executives who had the lion's share, perfect example, my favorite guy in the world, Jamie Dimon of JP Morgan Chase, was busy recently selling off his $500 million worth of shares. 120-something million of that price was gained in this year alone. Okay, 20% roughly increase. of share price of JP Morgan. Right before this happens, he's announcing he's now a billionaire. And as I said, promptly he will be selling urgently while any sheep try to get back in the market. And the good news for Jamie Dimon, even if the sheep didn't get back in the market, the club has enough money to buy his shares, again, courtesy of the taxpayer, while he exits. So he's going to exit with his $500 million share in shares cashed out, which I guarantee you he has already done. And yes, the banks will take a little hurting, but again, if I gave you trillions of dollars, and now you're going to lose some of those trillions of dollars, even if it meant you lost all of the trillions of dollars we gave you and you just go back to where you basically were, which was still a real damn good place for the banks. Highest paid thing on the face of the earth, besides oil and banks. It wouldn't matter, would it? You got a massive loan, so to speak, of trillions of dollars. You didn't have to pay any of it back. You just lost it on the stock market because we allowed you through the government, through national security, to do this for us. It ends up getting put on the taxpayer bill, but because of what we're doing with it, we knew what we were doing with it, causing a worldwide economic collapse, going to cause all kinds of dollars across the world to fill from different countries, including our own. We'll then have a big announcement where we need to get rid of this dollar, this debt. We got to form some kind of new currency or a block, right? New World Order or something, so they can then wipe away the debt as if nothing ever happened, and then start over. Except in the process, you're going to be hurting a lot of Americans' retirement. And you're really going to be hurting, which might even be more important for a lot of people than their retirement, their lifestyle. And when this day comes, I mean, you can say it's kind of here. No, not yet. No, not what I think is really coming. It's not here yet. And when it gets here, that's when I'm going to find that video of George Bush Sr. in the early 1990s giving his world-famous speech, telling the whole world and even saying it on camera to the whole world, the American lifestyle is not negotiable. And people stand up and they're cheering and yelling and waving and, oh. And I'm going to have to push pause right there and say, excuse me, I think the American lifestyle is real negotiable, as you all just found out. And people are going to be absolutely furious of those two things. Lifestyle erased. What I thought was the American lifestyle, I'll never have. That's very upsetting. Number two, my retirement, what I had as retirement, that's been wiped away. They're gonna have that. They're gonna make you get into those bonds. They're gonna make your 401k, whatever. I got a feeling, in America, they're just gonna push your 401k into something safe, like we got these Myra bonds for that Obama talk. Well, perfect thing. It's a good thing we passed that law. We never knew this was going to happen, and we'll just transfer your 401k right into these bonds for you to keep them safe. Or cause a nice little market drop in a few days' time to scare you into doing it yourself. Take care.